Let's talk to Ryan Littlestone. He is the trader and analyst at forexflow.live. Very good morning to you, Ryan.
Good morning to you on this fine morning, Nick.
Right, we've been in receipt of two slides. Without further ado, let's kick off. We've got the Aussie US dollar. Why have we gone off the beaten track today? What's caught your attention here?
Well, we've got a lot of moves coming into these commodity pairs. Aussie dollar and Canadian dollar, amongst others, and mainly all due to Trump and his tariff and potential trade war policies. We've had this ramping up a lot the last week or so, and it's been throwing these sort of pairs around. I wrote a post on Friday about Trump and what he's doing, and I'm not sure if he's doing a very good play here. He's doing a masterstroke on what he's talking about, because although he's throwing up big threats about tariffs and trade and things like that, what it's actually doing is bringing people to the table. His line all along is that the US is getting a bad deal, and it seems to be he's throwing out all these big threats, and then as the days go on, it's all calming down, and then he's offering exemptions. But the main thing is he's getting people around the table, people coming to negotiate because they don't want to be hit by these tariffs. Yeah, and that's a smart move on his behalf. And for markets where we trade the headlines, 1 minute he's going all guns and thunder about tariffs. That's hit the Canadian dollar, that's hit the Aussie dollar. And in the next minute, he's softened his tone and he's offering up exclusions and getting people to talk and sit down with him. And that is sending the pairs the other way. So for trading, it's great conditions. A bit of volatility, you pick your levels in between and you go with it. And we've seen that in this pair, the Aussie dollar, the 77 level area between sort of the 77 and 77.60 is an area we've spoken about before last year. Yep. Strong support level, and here we've seen it bounce off near that 77 area again, and up we go, and we're likely to have a test of 79 sometime soon.
Okay, so you basically, is this an easier pair to trade at the moment, would you say? Would you rather trade this than cable?
It's Aussie dollar at the moment is a pretty stable pair. We're in this boundary sort of 79, 80 down to 77. You can pretty much lean against the big figures on a short-term basis, or on longer term if you pick the wider edges. So you can keep those trades fairly tight. If you break 77, you don't have to hold it for 100 pips. 20 pips stop, and you see what happens after that. The same on the top side into 79. I'm a potential seller depending on the reason we're there, and also to the higher levels up to 80, perhaps 80, 50, those sort of areas.
Understood. Okay, well, let's have a few words on the US dollar against the Canadian. Similar situation, a commodity play, trade trade wars, etc., etc.
Yeah, pretty much. The NAFTA is front and centre of those trade talks and the tariffs. And, we saw it last week, headlines coming out saying that Canada's going to get hit by tariffs, and then they're going to get an exclusion. And we saw dollar CAD from 130 all the way down to 128, fairly big move, 200 pip moves. And that's good for trading. The 130 area is one we've been highlighting a lot last week. I've had twice I shorted up there. A very big level, a lot of resistance up there, a lot of offers up there. And it's been really, really solid. And those are the types of levels that traders we love. As I say, I shorted up there twice. Once for sort of 20, 30 pips I took off the first trade, then watched it drop another 100. And late last week again, sold it there, got out at 129.50. Again, we've seen it fall again, even further. So very volatile again, but as traders, we look for these good solid levels to lean against. You don't need to be wild with your trade. I had a 10 pip stop on it, sold at 129.95. 15 pip stop on it. I was going to stop at 130.10, but I also had a buy reverse put in there. If it was going to break, if it does break, it's likely to go some. So I've got a buy stop in at 130.10 as well, to hopefully catch any big break that we get. But, when you've got levels like this, even down to 128 now, that's a support level, lean against these big figures.
But the key point being there, okay, you're not falling in love with a currency pair, okay? You're basically trading what you're seeing. You're selling into a figure, okay, and you've got a buy stop above. So you're very happy to reverse your position very quickly and go long when you're actually looking to go short. And I think that's the key to being a good trader, isn't it? That basically don't have a bias to the long side or the short side.
Yeah, you can have a bias for the wider picture,
But
when
not
you're
day trading,
at
right?
certain things, when you get these solid levels like 130, and you can see from the chart, it's a big solid level. It doesn't matter what the news is in one aspect. There's the level. It's either going to hold or it's not.
Yeah.
If it's not going to hold in this case because it's big, it's likely to blow big. So you don't give it a lot of room. I wouldn't give it 50 pips stop on it. 10, 15 pips is the most I'll give it. Reverse into a long, and again with a tight stop in case it's a fake out. So you might risk 20 pips on going long at 130.10. And it's all about keeping your risk low. That's what trading's about, keeping your risk low. And if you catch the move, then your quid's in.
Yeah.
But
the last point.
You're right. Don't get married to a position.
The last point on that, okay, there was an old Japanese saying that basically trading, it's like trying to catch a salmon. You may lose many, many hooks before you get the salmon. So be really happy to take small losses in the pursuit of that big trend. In these sort of markets, okay, are you finding you're having to take lots of small losses to get onto a big theme, a big trend?
Yeah, I don't tend to hit that many small losses, but because I'm a very cautious trader by nature. But you're right, I'd rather take 5, 6 small 5, 10 pip losses because I'm trying to trade that big move where it can bring you 100 pips. On the flip side as well, when you've got markets that aren't really trending where they're ranging, I don't look for massive amounts of pips profits when I'm trading. The dollar CAD I sold at 129.95. I got out of half of it at 129.75, 20 odd pips. That's because the way markets are now, we're not getting big trending moves. So I look to lock in as much or some of the profit as early as possible, get my stop to break even maybe, then it's a free trade. Then you can nurse it, as I like to say, and you can push for the bigger profits, the bigger moves. But if they don't come, you've locked in some money, and you're not going to lose. So that's the way I'm playing at the moment. I get out for half when I can take some profit and run the rest and as a free trade.
Ryan, all very sensible stuff there. As always, thank you for your time. That's Ryan Littlestone. Thank you, Ryan.
Cheers, Nick.